Hello traders, everyone, my name is Gregor and welcome to our new video analysis surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at dollar index, silver, New Zealand dollar, German DAX, crude oil, and dollar CAD. Now, as you know, US yields have recently came very nicely to the downside after the US CPI data came out lower than expected in the US reported last week. But yesterday we got also the FOMC release of the minutes from November 1st. So this minutes somehow still maybe remind us that inflation and their 2% target is still far away. So that's maybe why we are seeing some recovery here on the US dollar. At the same time, keep in mind that we have the Thanksgiving, so looks like that these holidays is also another reason why some of the traders could be adjusting their portfolios, and that's why we are seeing some intraday shifts on the market. But looking at the dollar index chart, there is still a very nice response to the downside away from that resistance area. So I think that maybe ABC correction can be finished and that we are facing a new impulsive drop. Now this impulsive drop should then unfold in 5 waves. So far that's a still higher degree 3 wave drop, as it seems, with a wave C or wave 3 breaking this base channel support line, so meaning that this trend is looking extended and very sharp one. So ideally that's wave 3 going to be part of a new bearish sequence. And what's good about this wave C or wave 3, in either case we have to see 5 sub waves within this current leg to the downside. And if you look closely here, that's not really the case yet. I think that we are now just in a corrective phase here that could take place. Wave 4 could take even higher here towards 104, 104.50 maybe, to complete this pattern during the holidays, or maybe at the start of next week, when we could again resume to the downside when the US returns back to a normal working schedule. So I will be looking for more weakness here as long as we are trading below 104.85. If we break this level, then obviously this market is turning back to the upside, and I'm afraid that in such case dollar will face much more upside. Now looking at silver, we have seen some very nice move to the upside here on silver over the last few weeks, and so far we are breaking this neckline that we talked about in our past updates. We are also seeing some corrective movement now where the neckline could turn into support. So ideally more upside will be seen, but just be aware that maybe this wave 2 could still maybe once more test this 23.30 area. But if we fall back below $23, then I'm afraid that this head and shoulders pattern will fail, and in such case silver could stay sideways. But for now it looks like that we still have room for more upside here. The ideal target for wave C would be around $25. Now looking at Kiwi, now that's daily chart, very nice response from the 61.8% of this previous 2022 bull run here, which occurred at the end of that year. And so far that is a very nice move to the upside, not really breaking this very important key swing resistance yet, but we spiked above it. However, if the holidays will just be very slow and corrective, then I think that this could give us an opportunity here to catch this ABC move to the downside towards 59.40, which could be the first support. The deeper support for this correction, which could be already in play, is at 58.50. okay, so as long as we are above that level here, I think that this could be a bullish reversal for the Kiwi, since I'm looking for this rise to be as a leading diagonal. So the first leg here, that could be the beginning of a high degree bull market, is starting very slowly, but then after this ABC pullback we could see acceleration higher. So for now we are expecting just a temporary retracement here. So as I said, 89.40 is the first support, the deeper one is the 58.50, but we have to see one of these supports to hold after an ABC drop will be visible. For now that's still the first leg of this correction that can take us deeper or at least sideways. Now looking at German DAX, we are seeing some very nice and powerful break out of this downward channel. So I think that bulls are back in the lead and will take us even higher, because I clearly see this as an ongoing impulsive recovery. Looking here at the 4-hour time frame charts, we have some very nice and strong extended lag here in the middle, so maybe that's still only wave 3 of a new 5-wave cycle, but we are at a very strong resistance here, 16,000. It's a very strong level, so maybe there will be some back and forth moves, because also there are holidays, so of course market could slow down a little bit. But if we see some intraday setbacks, watch out for this support. Maybe at 15,800 could be the first one that could represent ideal base zone for this wave 4. But overall, I think that this German DAX should stay in uptrend. Even if suddenly we see something like this, I still would adjust the wave count and would be looking for a correction within uptrend, but just lower supports could be retested in such case. Looking at crude oil, we have seen some very interesting developments last week. We discovered some very nice volumes here at the end of this wave C that could complete the higher degree correction in the 3 waves. So ideally we are now turning bullish, because notice that that's also a very strong move from the lows. We are also seeing that price is trying to break this upper trend line resistance. So ideally market has bottomed, but even if this bottom is just temporary, okay, I still think that there should be more gains after pullback here. So even if that will be only an A, B and C move to the upside, well, you still should see wave C while the market is holding this support. So as long as we are above 72.47, I think that there can be opportunity on the upside. Okay, and now finally, if crude oil will come to the upside, well, keep an eye on that dollar CAD could maybe come lower. It was very sideways and slow recently, but if we consider that this could be a wedge pattern breaking out, and price is now consolidating potentially for a wave B triangle, then we know that there is room for more weakness, maybe 135.70 or maybe even lower towards the 61.8% if we'll see some accelerating price action to the downside. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon.